Yes, we are ready to go. Moderator, if you're ready.
Okay. So thank you very much, everyone, for joining. Good afternoon, distinguished colleagues, learned seniors, and valued participants joining us from across the country and maybe beyond. My name is Sadia El-Rufai, Vice Chair of the Law Firm Management Committee of the Section on Legal Practice, MBA. And it's a pleasure to welcome you to this very important masterclass, which is titled The Practical Impact of the Nigeria Tax Act 2025 on the Operations of Nigerian Law Firms. Today's session is delivered in technical collaboration with Federal Inland Revenue Service, FIRS, and we're grateful to them for partnering with us to ensure that legal practitioners receive firsthand guidance on the new tax framework and how it directly affects our day-to-day operations. As we all know, the NTA 2025 introduces significant reforms with real implications for how law firms manage client accounts, how they bill clients, handle payroll, structure partnerships, and meet monthly as well as annual filing obligations. Many of us have questions. And today we have with us the right expert, the right person to provide the much needed clarity and practical direction. We will begin shortly with welcome remarks from the chair of the Law Firm Management Committee, Mr. Olukayode Fabumi, followed by an opening address from Mrs. Folashade Ali SAN, the chair of the MBA section on legal practice. Thereafter, I will introduce our FIRS expert and we will dive straight into the session. Please note that we will take questions only during the Q&A window, so feel free to drop your questions in the chat as presentation is ongoing. Please make sure your mics are muted so that we have a smooth sail. And your questions will be noted and we'll try as much as possible to take as many as possible during the interactive segment. Once again, thank you for joining. At this time, I will call on the chairman of the Law Firm Management Committee, Mr. Olukayode Fabumi, to give his welcome remarks. Over to you, Kayode.
Right, thank you, Sadia. Thank you very much. And welcome to all our participants. Especially, I'd like to acknowledge Lionel Sick, Mrs. Folashade Ali, who is the chair of the section on legal practice. She's here with us. And I'm also commend her. We've done 2 events now, and she's been physically present. So we'd like to thank you, Ma, for your support and your encouragement. And the other Lionel Six that may be here, thank you for coming. I want to welcome you on behalf of our committee. The reason why this is being done is so that we are well equipped, starting off from next year. As you know, the year is rounding up, and the new Nigerian Tax Act is going to make tremendous impact on how we carry out business. And we don't want to be caught offside. And we thought it's very important that we bring very practical issues and learn from those who are, as they rightly say, the horse's mouth. So FIRS is the administrator of taxes in Nigeria, and we're very fortunate to have as one of the main presenter, the one of the people that are instrumental to this new tax regime. So I want to welcome you all, and please note your questions down. We want to make this very interactive, very practical, and at the end of it, we'll be better for it. So thank you, and have a good learning experience with us. Thank you. Sadia.
Thank you, Kayode. Thank you very much. Next, I have the honor of inviting Mrs. Folashade Ali SAN, the chair of the MBA section on legal practice, for the opening address. Please, ma'am, it's over to you.
Thank you very much, and good afternoon, distinguished learned colleagues, esteemed speaker, and all the friends of Nigerian Bar Association section on legal practice that have joined this webinar this afternoon. I welcome you all to this very insightful masterclass, the practical impacts of the Nigerian Tax Act 2025 on the operations of the Nigerian law firms. This is being organized by the Law Firm Management Committee, as the chair has already said. And I really commend the executive committee, ably led by Mr. Fabomi, and our moderator this afternoon, the vice chairman, Sadia El-Rufai, for putting together this very timely and impactful session. As has been previously said, Nigeria is really experiencing significant reforms, and the Nigerian Tax Act definitely has introduced a lot of compliance standards that each and every one of us will be affected by. There are just so many changes, and it's essential that we as lawyers understand these changes and prepare our firms, our law firms, for sustainable, structured, and that we're all compliant under the new regime. I'm certain that with the caliber of the speaker that we have today, the Special Advisor on Tax Policy to the Executive Chairman of FIRS, Mr. Olarinde, we're definitely going to have a rich and intellectually rewarding session on the tax implications. So I encourage all of us to listen. It's not a day of speeches. I just want to thank you all for joining, and I hope we will all leave this webinar better equipped, better informed to position ourselves and indeed the Nigerian legal profession for the next frontier of our growth and excellence. So I welcome you, and I wish all of us a productive and educative session. And thank you once again for joining. So over to you, able moderator. Thank you.
Thank you, Ma. Next, we will introduce the speaker of today's session. Please join me in welcoming Mr. Michael Olufemi Olarinde, who is a seasoned expert in tax policy and administration with a diverse professional background. He holds a bachelor's degree in banking and finance and master's degree in financial management. He is also a chartered accountant. He's a chartered tax associate and a chartered human resource professional. Mr. Olarinde serves as the head of Fiscal and Tax Reforms Division at the Federal Inland Revenue Service in Congress. And concurrently, can we please mute our mics? Thank you. He currently holds he currently serves as the head of Fiscal and Tax Reforms Division at FIRS, and concurrently acts as the special advisor on tax policy to the executive chairman of FIRS. With over 20 years experience, Mr. Olarinde specializes in tax policy, legislation, and research. He has earned recognition for his expertise around multiple national and international platforms. He's Nigeria's current correspondent to Commonwealth Association of Tax Administrators. He's a member of the United Nations Subcommittee on Health Tax, and also serves on the Presidential Fiscal Policy and Tax Reforms Implementation Committee in Nigeria. He's also a member of the Tax Administration Committee on the African Tax Administration Forum and the Dean of the Tax Policy and Administration Faculty of the Chartered Institute of Taxation, Nigeria, as well as various other local and international roles. He's an alumnus of the Commonwealth Senior Leadership Program in India and UK and the University of Oxford Blavatnik School of Government, Public Leadership Program UK. He's also a multiple awardee of excellent service in both private and public service, as public speaker, and has delivered papers in over 20 tax conferences globally. We have the privilege to have him lead us through this session, lead us through this discussion, where he will provide, insights on the new tax reforms and how it affects our practice as lawyers, as law firms. Please join me in welcoming Mr. Michael Olufemi Olarinde. Thank you.
Okay. Thank you very much for having me here today. I am delighted to be here, and I'm delighted to be among the learned fellows here and the learned silk. I am just an educated person. I may not be learned. However, I bring you education this afternoon. Thank you very much. I'll be going straight into my presentation. And before, I think I need to acknowledge protocol as an African and as a public servant. We recognize protocol. I recognize all the dignitaries that have been recognized. My apologies if I'm not able to mention name right now. So I respectfully recognize them while I go into my presentation. I'll go straight. We all know that tax in itself is law, and there is no tax that can be implemented without a legislation. And today I've been invited to speak on the current tax reforms and how it affects the legal profession. I'll be speaking to that this afternoon. I'll be sharing my screen so that we can all have an understanding of what I'm speaking about this afternoon. So I need to give you an overview of the tax reform and how it affects individual transaction, how it affects our transaction before I now go into how it affects you as law firms. So let me share my screen so we can all see. I hope I have access to share my screen. Okay, I think I do. So as lawyers, the first and everyone I speak to, this is the first question I always ask them. Have you read the law? Can you see my screen, please, to be sure that I'm speaking to?
Yes, we can. Yes, we can.
Okay. So the first thing I always ask everybody, I just finished actually a presentation before this one. So I was trying, as you were setting up, I was trying to log in. I was logging out of another presentation, and those ones I was speaking to some professional bodies, also another professional body actually. So before joining this, and there were a lot of questions that was coming forth, and it was only showing me that they, as professionals, have not even read the law. And so we as lawyers today, or those of you on this, as lawyers today, I hope we've read the law. And I hope not the ones being read on the social media, not people reading 10 critical things in the tax reform. Some have read 50 agencies that will lose their job. Some have read 10 incentives in the law. So as legal practitioners, I believe that we are the law. You should read the law so that you can always engage with an informed opinion. So that's what my first question to the House. Have we read the law? And let me move straight. Setting the context, you know why this law was developed? President Bola Ahmed Tinubu, after coming to office, I believe that the tax system was not, well, we all believed, not only the president, we all know that the tax system is very complex, coupled with duplicity of taxes, multiplicity of taxes, coupled with a lot of ways, unorthodox ways people collect taxes, and a lot of problems. A cake law, which was one of the biggest ones, having laws of 1939 still be in operation today. So he set up this committee called the Presidential Fiscal Policy and Tax Reform Committee. Also, one of it is to ensure that Nigeria can attain over the 18% GDP by the year 2026. And knowing that today our GDP is still under or around 10%. And so the president gave a policy so that it will guide the people working on this tax law. And he said something very, very in a layman's term. He says, we want you to develop a tax policy that is fair, transparent, and growth-driven. A policy that is taxes prosperity and not poverty, and tax fruit and not the seed. And so this was the major charge to the committee. And now, the committee was further given the principle of the tax law, which was to make it simple. When you say make it simple, in terms of the structure of the system to be simple, the sector, the application should be simple, administration should be simple, legislation to be simple. I have had an engagement with some lawyers in the past, and when you talk about legislation being simple, some have said, okay, if it is too simple, then how will lawyer chop? Because they need to interpret the law to you. However, we believe that it can go beyond that. What is there when you're passing an instruction, the law is supposed to be an instruction, rules. And when you pass such instructions and people you are passing the instruction to do not understand. So, well, the rule now world over is that our laws should be written in plain English so that people can really understand and it will engender compliance. And so this law was drafted to be as simple as possible and say harmonize all fragmented laws. Today we have laws that are contradictory. So you see provisions in CITA, Companies Income Tax Act. You see the same provisions in another tax law. However, they are not the same rules. Now you see enforcement rules in CITA, you see enforcement rules in PITA, then you see another type in FIR Establishment Act. Then you now see an overriding position that says where there's any other law is in contrary to this law shall prevail. We do not really need that if we can update our laws. Though that was what happened because those laws are later, some laws are later law in time. And of course, the application for is that the later law in time may apply, especially when it comes to the subject. So they say the principal law. So these are things that have been done. Also, neutrality of tax. Tax should be a consequence of economic prosperity. Tax should be a consequence of performance. It should not be an additional cost. So if you are doing business and you have not made profit, you should not be talking about tax. So today people can put tax on their business even before they start. It's not supposed to be. Tax is supposed to be a consequence after you have made profits. And can our tax law and tax environment be competitive so that people can know that, oh, when I do business in this place, there's certainty of the tax I'm going to pay. So it makes it easy for me to know the environment is competitive. So if your tax rules are better than other places, it makes things simple. Now, tax certainty. Now, can we know how much tax is to be paid? Can we know who is supposed to collect what? So this are certainty. Then the law was also drafted the law was also drafted to be taxpayer focused. So government, when this law were being drafted, government was not thinking about revenue, was thinking about how to stimulate the economy. That means allow the taxpayer to be able to do business, make profits, and pay tax. It's a consequence. Tax should be a now consequence of their performance. Let this law also improve the efficiency of compliance. Then the law should be data-driven. The policy choices, when we are making policy, it should be backed with data. So if you want to put a threshold for people who will not pay tax, we should know how many of them we have and how much tax had been collected from them in the past so that we can study whether it's negligible or not. I've told you about taxing the fruit and not the seed, and taxing prosperity and not poverty, which means that for those still struggling, please ease them of the taxes. And today, Nigeria should also align with the global community in terms of tax policies, tax legislation And so we should have rules that mirror what can obtainable in the global community. And now the structure of these laws, we have 4 tax laws, which we already know today. Nigerian Tax Act is a law that imposes tax in Nigeria. And as lawyers today, I want to bet in this room that nobody knows how many tax laws we have in Nigeria. And why I've said this, if we were physical now, I would have thrown this question to the room and asked if anyone can tell me the numbers of tax laws that we have. However, I would say even me, that I'm a tax administrator, that I use these laws every day. Like you've read in my profile, I've been doing tax policy strictly from 2012. And what it means is that I've been part of all the law drafting, all the tax law drafting since 2012 till date. I don't know how many tax laws we have. And why I say so is because you think you know it today, then tomorrow the National Assembly enact a new law and they put a taxing provision in that law. And so there are so many laws that have one form of taxing provision or the other. And this constitutes a tax legislation. As in that portion, even if it's a section, constitutes a tax legislation. So what has this law done? Bring all those tax legislation into just one, into the Nigerian Tax Act. If it's an imposition provision, it's brought into that law to impose. So so everyone can carry one law to say, oh, this is the law imposing taxes in Nigeria, every tax. So the second law is Nigerian Tax Administration Act, which is a law that provides rules governing tax administrations at all levels of Nigeria, whether it's the federal, state, or local government. Then we have the Nigerian Revenue Service Establishment Act, which is a law repealing the FRS Establishment Act and established the Nigerian Revenue Service. And so why are we establishing the Nigerian Revenue Service? Today, the FRS collect taxes on behalf of the Federation and not the federal government. However, that name makes it seem as FRS is just a tax authority of the federal government. So the essence was to ensure that that captures the name properly, captures the function properly. And so that is one of the critical reason why the name was changed. Then we have the Joint Revenue Board Establishment Act. And another reason why the Nigerian Revenue Service Establishment Act was enacted is because if you check that FI Establishment Act today, you have administrative provisions, then you have establishment provisions. So what we've done today now is to only make that law an establishment provisions. And all the administrative provision is in the Nigerian Tax Administration Act. And so it could delineate the FIS role as a regulator, as an administrator, from the rules governing tax administration. So we have the Joint Revenue Board Establishment Act too, which is a law that establishes the Tax Appeal Tribunal and the Office of the Tax Ombuds. Today the Tax Appeal Tribunal is being established under the FI Establishment Act. And some, sorry, please, can people mute it's distracting me. And so the TAT today is enacted provisions under the FI Establishment Act. And so some have also complained that it looks as if it's an appendage of the FRS. So pulling out of that law and putting it in a common, a law that every other person can, a law that is autonomous, make it more independent. Then the Joint Revenue Board as a body now, which was hitherto as Joint Tax Board under the Personal Income Tax Act, is now having a full-fledged law. And this is also to ensure that they have a form of autonomy and they can provide standard service that all tax administrators can use so that They can standardize what they do. So if tax administration in Lagos should not be different from tax administration in Kaduna, or should not be different from tax administration in Kebbi. So they could provide a common services like a tax administration portal. As FRS has a tax promise, TTD can set up something that all tax authority can also connect to. We are talking about tax ID. The tax ID should be common, so you don't move from Lagos to Anambra, from Anambra to Kebbi, and have different tax ID. It can only be possible if it's managed by one system. Now, a new one was also established called the Office of the Tax Ombuds. The Office of Tax Ombuds is to provide a form of arbitrator, a form of a person that can support taxpayers in achieving or receiving quality service from tax authority. And so that is the essence of the tax ombuds. Let me move on straight to the provisions of the law. Businesses are now reclassified into two. We have small and large. Today, small business is a business that have 25 million threshold and below. But going forward, the company business will now be 100 million and 100 million and below. And such business that have a small company will pay tax at 0%, while the large companies will pay tax at 30%. The law has also allowed the president to be able to reduce this rate at in the nearest future. However, I don't know how whether, because in the past there have been time the president attempted to change the rate, wasn't the president, was the minister now. So probably when the president is giving say, I don't know if there can be any other debate about whether he has the power to change the rate without recourse to parliament. Also, earmark taxes like NIDA levy, tertiary education tax, and other have now become consolidated into one tax called the development levy and charged at 4%. Today, all these levies are almost about 6 or 7, and if you pay them separately, they're about over 6%. So government has reduced this tax rate. Sorry, can those talking behind
Mr. Yakubu Amos, please mute your mic.
Thank you. So companies today pay a tax called minimum tax when they don't make profits. The law now is now abolishing that provision, so that only companies that make profit will pay taxes. And this is where this is also aligning to government policies that say tax the fruit and not the seed. So when such company has not made any fruits, there's no tax to pay. Then also, however, we have large companies that probably would have they have all the sophistication to modify their income, and also so in the process of modifying or doing what we call tax planning, they could erode their profits. And so there's a provision, global concession in the now, that ensures that where profits of multinationals, that they should pay what we call an effective tax rate of 15% in every jurisdiction they find themselves doing business. And so the provision says that where they do not pay up to that 15%, in that jurisdiction, when they move that profit, where their parent companies is situated, we also can charge the balance of that 15%. So what it means is that if Nigeria decide to give them incentives at a reduced tax rate, they will not pay that tax to Nigeria, they will end up paying it somewhere else. So Nigeria also had to now ensure we have a law that allows us to collect the maximum tax we are supposed to collect, the fair maximum tax we're supposed to collect. So an effective tax rate of 15% is now introduced for MNEs with a global turnover of 750 million euros, and large companies with 50 billion gross annual turnover. And This only applies to those class of companies and not all companies. Now, tax on capital gains is also harmonized. Some said tax on capital gains have been increased, but that is not the fact. In fact, today we no longer have capital gains tax. What we have now is tax on capital gains. So what it means is that your gains from disposal of chargeable assets are now added to your other income and taxed across board. And what is going to be taxed is not the income. It is still profits that will be taxed. So the law allows you to take away every expenses, whether from your business or from the assets you just dispose. And also, if you have made loss in any respect, you can claim that loss. Today, you cannot claim loss from other income from your chargeable assets. You can only claim loss from the same class of assets. And so, for some, the interpretation is that some of people will pay no capital gains if they are small, under 100 million and below. Or if you are an individual, you pay at the rate you are supposed to pay, while others will pay at their rate too. If it's a company, may pay at 30% if they so make out profit. Now, for individuals, so for individual tax, if you're making 800,000 chargeable income, which means you would have taken away all your reliefs, whether rent relief, housing fund relief, national health insurance scheme, life assurance, and the rest. If you have 800,000, you are to pay tax at 0%. Then what it means is that every one of us, the first 800,000 of our chargeable income is now 0%. For everyone who earns, which is a salary earner or who earns an income today, if your income is still lower than 20 million, your tax will not increase. It will, in fact, it will reduce. So please, the person drawing line on this system should please help me so I don't. So the next one, for those class of person that may be impacted a bit, maybe people who have income above 50 million. Today, they will probably pay the last band of their tax above 3.2 million at 24%. But now, if it's exceeded 50 million, they will pay at 25%. So when government say we don't want to tax poverty, they want to tax prosperity. I believe by all standard, 50 million is prosperity in Nigeria. And so those class of person may be impacted a bit, and not the entire 50 million will be impacted. No, not even 50 million, it's above 50 million. So that is it. Minimum wage earners are totally exempt from income tax going forward. Now, VAT remains at 7.5%. However, we have what we call input and output VAT. This input and output is allowed for you when you purchase. Input VAT is when you purchase goods. You pay input VAT when you sell or you supply services. You charge output VAT. The law allows you to take away the input during purchases and from your output during sales and remit the balance to government. In today's law, you are only allowed to claim input VAT on goods purchased for resale and goods that form part of raw materials in developing another good. So what it means is that if you are doing, what it means is that if you are into services like professional services, you cannot claim input VAT today. But the law has now been reviewed to allow you claim all input VAT from your output VAT. Before, if you acquire an asset, the input VAT on our asset is actually very large, and it can erode the tax even for 1 year. However, government, having considered everything, has now allowed that all input VAT can be claimed. So it means that it's definitely going to impact on government revenue in recent time. So it's going to take time for many people to finish claiming their input VAT. And so these are some of the things we need to note. And as law firms, this is going to impact our businesses positively. I say positively, because a lot of amount you can't claim before, you can claim now. Then this will be done mostly electronically, because the FRS is introducing what is called e-invoicing. If you look at Section 13 of the VAT Act today, everyone is expected to issue a tax invoice, including the law firms. Issue a tax invoice, and the tax invoice must have your tax identification number, your address, the kind of supply you have done, the services you have performed, the consideration, and the VAT on such. And on that is what everyone must issue. So it's a law, which means it is compulsory. And however, we know that many people do transactions without an invoice. So government is now automating this invoice system by creating a central portal for e-invoicing in Nigeria. And this central portal will ensure that everyone issues an invoice and it is passed through the central portal before it gets to your supplier or your customers. So FIS is deploying an e-invoice system that ensures that when you send your invoice to your customer, it passes through that system before it gets to your customers. And so government have visibility to every business transaction. So it's to create transparency. Then there's sanctions for failure to comply with this provision. Also, government is now saying where it's not providing, because in this instance, like I've mentioned input and output for you, that instance, it means that people will be claiming VAT refund, because once their input exceeds their output, they will need to claim VAT refund. And in claiming such refund, the law has now said FRS must honor such refund within 30 days of receipt of application. And now, in law today, if you make any refund claim to FRS, the law provides that FRS should audit you and confirm that you are not actually owing government before go. Okay, before this money is... Hello, can you hear me?
We are hearing.
Hello,
we are hearing you loud and clear.
Okay.
Yes,
Okay.
you can hear
Thank you. I got a notification that I was muted or something. So the law now says that the accountant general, before sharing the VAT, must set aside the amount which taxpayers have applied for refund, so that they can be paid within the 30 days. So the states can no longer share all the money. They will only share what is net of refund claims. However, since FIS should not be carrying out audits, the law has also provided severe sanctions, including penalties, blacklisting, prosecution for false and fraudulent VAT claims. Now let me go into why many of us are here today. I don't know why my system is... Okay. Good. Now, I've spoken much about overview of the NTA. One of the key elements is unification. The identification numbers, like tax ID, as a universal reference. Everyone must obtain one. Every lawyer in your every natural and artificial person must obtain one for unique identification. There's been updated definition for taxable services, including digital transactions. Also reinforce the rules. Sorry, let me quickly attend to something here.
I think you're muted, sir.
Okay, thank you. The host muted me, so I couldn't unmute. Thank you. I'm back. Sorry, there was a power surge, and so the equipment in my office were needed. So can you? Okay, yeah. What's happening to my screen? I'm still looking for my. Okay, I'm still sharing. So it's reinforced that every natural and artificial person must have their tax ID, and every document issued by us, whether as law firm, every business, every transactional document must carry a tax ID. If you issue an invoice, must carry your tax ID. Every agreement, financial transaction that you carry out should have it. The objective again is to simplify compliance and broaden tax base to reduce leakages. What's happening? Okay. Now, we know that provisions affecting professional services fair. The first one, provision, the grand norm, which is our constitution. Section 24 of our constitution states that it shall be the duty of every citizen to declare his income honestly and appropriate to the lawful agency and pay his tax promptly. And so legal services are now clearly defined, even in our law, as taxable supplies, to ensure that even not just legal services, it also mentions some professional or most professional services. And so it's obvious that whether for VAT, for income tax, legal services are also captured. So we need to note that stricter service recognition, including retainers and milestone payments. Sorry, who is drawing on these drawings is disturbing my. Also, cross-border advisory, arbitration, and IP work is deemed to be supplied in Nigeria if the client, the subject is in Nigeria. So invoice must reflect VAT, withholding, and standardized documents. So like I've explained earlier. Now, scope and chargeability, law firms register. Law firms, for me, my understanding, law firms are also registered under CAMA and are charged under the provisions of the Nigerian Tax Act based on residency rule. In other words, a law firm is liable to tax in the place where it's registered or carry out its business activity. So sometimes too, it may not just be by registration. Admin, please, if you can help me take off all these drawings they put on the, and more is coming up. Please, if you can help me take them off. So, so it's not only by place of registration. It's mostly by residence, and there are residency rule in the law. One of them is having 183 days in a place. That is the basic one. One of them is when you have a principal place of abode. One of them is where you have your where you have your families, your ties. You have great ties in the place. Or one of them is a place where you are on the first day of the year. So there are provisions in the law that defines what residence is, the residency rule. And so income subject to tax also are income is imposed on profit or gains arising from operations. And so income tax is on profit and gains, and profit or gains from trade, business, profession, or vocation. And fees, allowances, or any other remuneration for services rendered, whether it's core income streams, which are core income streams of the law firm, are also chargeable to income tax. Now, I believe that most law firms are registered as individuals. What I mean is register as business name, and so it's expected that they are going to be chargeable by the relevant State Board of Internal Revenue. However, where they either have subsidiaries, or they have group of firms, or they have any other business concern that register as limited liability company, this will definitely go under the purview of the Nigerian Revenue Service, or FRS today. However, VAT is still collectible by the federal level, and it is collected by the Federal Inland Revenue Service. A law firm may be charged to tax in its own name, or in the name of the principal officer, agent, receiver, liquidator, or administrator, depending on how such business or such transaction was structured. The principle of deductibility, law firm adjusted profit, is determined after allowing deductions for expenses that are wholly and exclusively incurred for the purpose of trade or business. That is law practice. What it means is that if you are carrying out a professional service for your client, whether filing fees, transportation, utility charges, and every other logistic charges, all of them are allowed for deduction before the income is chargeable to tax. And common deduction of law firm salaries and wages are allowed, rent for office space, So if a principal partner or has a building that he lives on and uses one room as his law firm, only the costs attributed to that one room will be allowed for deductions, and not the entire building. And so training and continuing legal education expenses, only and exclusively incurred for purpose of law practice, will be allowed. Then capital allowances on qualifying assets, office equipment, motor vehicles, and all these are chargeable to reduce the profit of the law firm before taxation. Now, rules for firms that hold client money. Clear distinction between client money held in trust, not revenue, and firm income fees. So firms should separate their fees from client money. And so if you are issuing an invoice, it should be well spelled out. If you are going into an agreement, it should be well spelled out. So for tax purposes, revenue recognition is triggered by services rendered, milestone achieved. And so this should be well spelled out. And deposit becomes deposit which become non-refundable. We know there are some instances where people say, oh, you keep a deposit for certain thing and it's non-refundable. Such deposit may constitute a revenue or income to the law firm. So this should be noted, and it will be taxable. Now, whether you have a trust or escrow account, trust account may generate taxable interest. So if you keep such money in an account, we know that what has been deposited is an amount, the interest on it is taxable. Law firm must show segregation between client trust account and firm operating account. So this should be clear. Firm operating account is any income from it is taxable. Even the client trust account, if there is an interest on it, I'm sure that interest is not going back to the client. That interest constitutes an income to the law firm, and it will be taxable. It's under the income tax. Disbursements are taxable when service elements exist, or so when you say some things are called is it disposable, or what is it called? When there's a service element of it and there's a consideration, this may need to be checked. Also, costs are marked up before billing clients. So when there's a markup, that cost, that markup will be seen. And also, that is where there are services that have cleared. However, some will charge, okay, pay me 5 million naira, and that is the income to that person. However, the law allows you, when you're preparing your accounts, to determine what to spell out. So like the law, or when you go to court, you say this is based on fact. The taxman also work with documentation. So everything that needs to be proven has to be shown in those documents. Now, talking about the new laws, we have transitional provision. Okay, implementation timeline. Okay, that people can enforce. We can have internal upgrade, tax ID validation for clients and suppliers. This is just helping firms who want to adopt or migrate using the new laws can follow this suggested rule. Filing of reports, obligation apply. And so, okay, and also looking at the new law, because for companies, there is a time for which they need to start filing their returns. This chart is also being drawn up to ensure this is done appropriately. And so the rules concerning every person, whether a company or an individual, may apply based on what I've put here as a suggestion. Now, daily operational impact for law firms. So for areas of client fund held in trust, I've explained this earlier, interest, this must be disclosed, the beneficiary, and a tax treatment. Client fund, say not taxable, I've explained this earlier, documentation, mandatory audit trails. So everything you do is expected that you keep proper documentation, and you need to report appropriately as and when due. So lawyers should not be seen to be those that flout the law. We know that lawyers understand the gravity of flouting the laws, and so it is expected to follow the right and provide information. Transfer between accounts. So when board and partner authorized, board account partners is authorized, practical requirement is that there should be trail, an authorization that shows transfer between accounts. So it doesn't look like these are just payments made to people or personal withdrawals. So if not, fund may be deemed as revenue. So people have complained that what about I move money from one of my account to another account? Will you be using those information to tax them at different income? No. There must be proper documentation that shows that you were actually moving funds around. So service fee versus reimbursable expenses, only pure pass-through costs are exempt. Tax risk exposure is that it may be taxable where markup or value added exists. I had explained this earlier too. And so statutory deductions on disbursements. Practical requirement is that there must be withholding tax where applicable. So when you are making payment to your suppliers, it is important that you deduct withholding tax and remit accordingly. Joint liability with clients if it is not done. So when I mean joint liability, there may be sanction on you that did not charge, and there may be sanction on the person that did not pay. So though the law says that where someone has not charged, definitely there will be penalty. The person who did not pay, that will, however, now may not, it's not sanctioned because the provision, the duty was given to the person making payments. Now, bill payment and collection. So VAT on legal fees, we attract VAT. So when you charge your legal fees as you're providing services, all legal services are VATable. There is also withholding tax to be charged on such legal fees. Clients will withhold tax from the professional fees because the law provides that there should be a chargeable withholding tax on payments made to anyone. So professional fees are clearly within the purview of the withholding tax. Retainer and deposit. This is where it's treated as income once earned, milestone achieved. So at that point, a retainer will be treated as income when the milestone have been achieved. And so naturally, income is earned, tax is payable annually. And so definitely most retainership, the longest will be an annual retainer fee. So it is taxable. So where you service international client, VAT applies on service used in Nigeria, except the service is not done in Nigeria. So if you happen to represent a client outside the country, such will be chargeable to VAT outside the country. But if you do anything within Nigeria, it is chargeable. Even if the client is in UK, you are writing a brief, or you're doing writing a brief for such clients here, or you're giving an advice, such transaction is chargeable to VAT. Even when it is foreign payment, documentation must show conversion. And so if it's foreign, documentation must show every transaction. And it's expected that if such person is a reoccurring, you must have a tax ID in Nigeria. For payroll, HR, and internal operation of law firms, payee is still chargeable on the payment, your salary you made to your employees. So strict monthly remittance and employee tax ID must be available. Partner profit sharing, subject to personal income tax. So where you share profit to partners is subject to personal income tax. And also such payment, yes, will be liable to withholding tax. Contracts, lawyers, and counsels are also, contract lawyers and counsels are classified as independent service providers, and withholding tax will apply. Fringe benefits and bonuses are all still income, and they will be chargeable to tax. The only thing that's not chargeable to tax if they are equipment or things you have given to them. So even when you give them what we call BIK, benefit in kind, you decide to give somebody a house as official, a house to stay. Such house is referred to as benefit in kind and be taxed appropriately. You give the person a status car vehicle to use, is a benefit in kind and will be taxed accordingly, except it's a pool car. So the next thing, firm structure and governance. A solo tax practitioner must file annual filings, and business tax obligation. So you must provide your annual filing, and your business must fulfill all tax obligation. Partnership and LLPs must file partnership returns plus individual partners taxes. So the partnership will file a whole returns being partnership, and the individual partner will file their taxes. However, taxes are only chargeable in the hands of the partners. Taxes are paid in the hands of the partners. Multi-branch firms, registration and filing in each state of operation. And VAT is also can be remitted centrally, capturing every state's firms, and their contribution to such withholding tax. So it will help for attribution of same withholding tax, I say withholding VAT. It will help with attribution of the VAT to the appropriate states. So greater emphasis is on internal governance, audit trails, and sign-off for every payment. So this needs to be compliance roadmap for law firms, operational compliance calendar, daily documentation of transfers, audit trail, weekly client account reconciliation can be done, monthly VAT returns, withholding tax remittance and payee remittance, quarterly review client deposits and milestone, and annually full file filing, financial audit, and compliance review. Client account compliance checklists need to also be developed. This is by way of giving some level of guidance to firms that they can follow to ensure compliance, to ensure swift compliance, to ensure good compliance in business. And also, so you should separate client trust and operating accounts. So don't mingle them. Don't put them together. So it's always good for business. Maintain ledgers per clients. So it's good as you maintain different files for them. You should be able to have an automated system or even a simple Excel file. Excel file on computer can help you develop ledgers. And so as lawyers, please, it's very important to also engage professionals like accountants to help you maintain this financial documentation. There should be proof of tax ID for every invoice and transaction you get into. So all your clients, you need to have their tax ID. Also, interest reporting template. So you need to keep that because this is your income. This is even a passive income. So if you've invested in treasury bills, you've invested in other things, ensure you keep them. Yes, some of them might have been chargeable to tax, ab initio. It's also good. It helps you to either, some of them may be offset by the credit note at the end of the year from your account, from your tax payable, from your profits. However, some of them constitute final tax, what we call frank investment income. And those, the ones like dividend that has been paid. So it's very good to understand the way these structures work. Also, automate approvals for fund movement. Like I said, if you're moving fund from one account to the other, some say, oh, I want to make it up for an investment. So as you're moving them around, ensure that there are internal control, the internal level approvals that the tax man can rely on as the source of truth or the source of reliable documents. And we also ensure that you should file, you should document your information for at least 7 years. This is status, what's it called? Status of limitation. It used to be, I think it used to be 5 or 6 years before. Now it's about 7 years. In fact, the law says 7 years after the transaction. So it's almost 8 years now because the law says 7 years after the transactions. So the taxman can still ask for documents of 7 years old. Unlike before when it was, I think, 5 years here. So audit readiness expectation at every time, you should be ready for audit and expect to test on trust, account segregation, VAT and withholding tax treatment, disbursement records, partner income allocation. These are things the taxman may be looking out for when it comes around. Auditors will request such documents and not narrative. So you cannot explain. In the local palace, when you a tax auditor or taxman come to you and you want to explain, there's in local palace they say you go explain tire, because they say, so that's why I say firms must show, not tell the compliance story. So you must show with an evidence what you have actually, how the transaction has been. So it is interesting that you keep all your documents well. Then immediate internal controls that may be required by firms. Develop and update charts of accounts, then automate your billing system with tax computation. So now everything is digitized. You can have a small billing system and ensure you automate it with your tax computation, so that at every level, the system can identify your income, what constitutes your profits, and start thinking about what tax will be applicable on them. And especially those transactions are monthly, which are service-based transactions, those that are probably chargeable to VAT. And those payments that withholding tax has been deducted, you can marry them so you can keep proper records. And also mandatory compliance officer or responsible partner. So like I said, ensure that you engage professionals that can help you as compliance officers. Where the law firm is not big enough, one person can be, an admin officer can be trained with small document processing systems, accounting system that they can use on daily basis. Then partner approvals should be required for one, transfer from trust accounts. Also, client refunds, when you do client refunds, and payment of statutory deductions, so that the taxman, when they come to you, they say, oh, we saw in your client accounts that, oh, this client, there's deposited 5 million naira with you. And you're saying now that you have returned, you only expended 3 million, you have returned 2 million. But there is no document to show the return. These are things. So we are saying even when you have document to show you returned it, it should not just be a bank statement that's showing that, see, I returned it. There should be documentation. Maybe from the principal partner, maybe you raising a memo that says pay this person, and there's full voucher processing and other things that shows that it was documented. And payment of statutory deductions should also be done. If you deduct VAT, if you charge VAT, please remit. If you deduct WHT, remit. And there should be evidence that all this have been done. Key takeaways as I round up. Separation of client and firm's fund is now a tax compliance issue, and so it should be well maintained. So revenue recognition begins earlier and is strictly monitored, should be strictly monitored. VAT and withholding obligation apply to all legal fees. Supporting documentation must be real-time and audit-ready. Law firms must upgrade systems, policies, and staff capacity. And once more, I said staff capacity because the accountants must also be engaged. If the law firm is small, you can engage a multi-purpose officer who understands accounting. I always say taxation is an intersection between accounting and law. And you cannot understand tax without some good knowledge of accounting, and you cannot understand tax as an accountant without good knowledge of the law. And so when we argue about taxing provision or the tax law, there must be good understanding of both professions. And beyond those two professions, taxation has even gone beyond those two professions. Taxation is now a multidisciplinary profession that ensures that you have everyone in the room, especially when you're talking about different transactions. Now I'm talking about telecoms. They may mention some terminologies. Those terminologies or transactions, activity, you need to know whether it constitutes income or it constitutes an expenditure. So if a taxman does not understand them, there is a problem. So that's where we say it's a multidisciplinary profession, because you must understand both sides. And so I think this is where I would draw the curtains. I say thank you for having me, and I'll wait your questions.
Thank you so very much, Mr. Olarinde, for that insightful, educative presentation on the new tax law. Now we'll move. There are a couple of questions, even though during the presentation, some of the questions have already been answered, but we'll go ahead and take the ones that have not been answered. We have a question here that says that, are there sufficient safeguards within the NTAA to prevent abuse, overreach, or unlawful disclosure of personal data, that by Section 71, the service, I don't know, by Section 71, the service, maybe the FIRS is allowed to use digital tools to collect data from financial institutions. So can we take that first, sir?
Okay, it's very clear. I'm sure the person who dug this out can go further into the law and also dig out other provisions on confidentialities. So there's a law provision on information confidentiality. And in fact, the sanction is for both FRS staff and the board can get imprisonment for breach of taxpayer confidentiality. Under the law, it's very clear that even tax information cannot be revealed to anyone, even if it's a proceeding in the law courts, except such case is on tax evasion. That is the only way a taxman can come and give evidence in court. So the tax information is strictly and highly confidential, and no one can spill same. And so where we can use data technology, the technology also will be guided with the fact that only every information that passes through that system is well protected. And so FRS have passed all the ISO tests in terms of information security, and so all our computer system, I'm sure you've never heard about any breach since when we started using automated system. And so we will continue the same way. And of course, where we want to commit to utmost confidentiality of taxpayer information.
So we should be rest assured that the laws actually provides adequate protection for data. Okay, so the next question has to do with interagency collaboration between FIRS, NDPC, MBA, CBN, and financial institutions. How the collaboration can be strengthened to ensure taxpayer privacy, the same issue around data protection, because they will be sharing data.
Yeah, so FIRS is more of a receiver, not a giver. So FIRS will not share data of taxpayer with anyone. So all those people you have called they are regulators. So don't forget, FIRS is not a regulator. FIRS is a tax administrator. Now, those are regulators that deal with different sectors. FIS deal with everybody. So what FIS is collaborating with them for is to receive information from them for the purpose of tax administration. So FIS can receive, even today, when you carry out any financial transaction, the NFIU sees everything. FIS is already have a collaboration with all of them. And so we receive more of information and we don't give. So that is it. So the best you can say FIS will give out is FIS can say lawyers can just say lawyers pay an average of 1 billion, remitted an average of 1 billion. 100 trillion. So that is the best FIS can say, and that is just a statement. It has not given any information. And those kind of information can be sourced from probably a place like NBS. It can be sourced from CBN. And how will they now get such information? That's adding invoices or data from legal firms together and just say lawyers have paid this class of taxes. So FIS cannot give information out, they rather receive.
Okay, thank you. There was a question about taxation of a limited liability partnership, which you answered. You said the individual partners will pay their tax, and then the partnership itself will pay the appropriate tax. The other question has to do, even though, probably it's obvious to some how this should be treated, but I'm sure it's a source of concern to a lot of people in practice. That is a law firm's annual turnover of over 100 million naira, including clients' money, taxable. If you can help, give the simplest answer for people to understand how to handle these issues. Sir, you're muted. Sorry. You're muted, sir. You're muted. You cannot unmute yourself. Okay.
Okay, can you hear me now?
We can.
Yes.
Yeah.
Yes.
So I'm not being given access to unmute myself. So sometimes the system. Hello, can you hear me now? Can you hear me? Hello?
We can hear you.
Okay, good. So for let me answer the question.
Please, can everyone mute their mics so that we have a class? Can everyone mute their mics, please? Okay, please go ahead, sir.
So for the one for LLP, so if it is limited liability, so we have for LLP, I've explained that one. The income will be taxed in the hand of the partner. Now we also have LLC, limited liability partnership. That's what we're saying. Companies that come together.
Yes.
Also, the income will not be taxed in the hands of the partnership. It will be taxed in the hands of the partners. So it has to be distributed to be taxed. However, the law frowns at people keeping income without distribution.
You've been muted, sir.
Okay.
Yes.
Okay, can you hear me now?
We can.
Can you hear me now?
Yes, we can.
Okay, good. So for the 100 million, professional services are actually not seen as small businesses. So professional services are not within that 100 million threshold. The law says that a small business is a business that have a turnover of 100 million or an asset base, a net asset of 250 million, except if you are in the business of, if you are a professional service provider. So accountants, lawyers, engineers, consultants who have their professional services are not seen as small companies, because even one case can be more than 100 million. And so, however, it's not seen, professional services are not captured as small companies. So I believe I've answered that question.
So, sir, just to get this clear, you're saying that professional services are an exception to this 100 million naira threshold?
Yes, there are exceptions to it. They are not covered.
Okay.
So yes, they are not covered.
So the next question has to do with a question regarding billing a client for services which requires them to make some statutory payment. Will the entire sum be taxed, including the statutory fees to be paid out?
So I'll explain that all expenses incurred in the course of delivering, in the course of your transactions are all allowed. Okay, I was muted again. So what I said is that all allowable, there's something called allowable deduction or allowable expenses. So if you are carrying out a transaction for your clients, you are doing, and there are expenses that are incurred, you are allowed to take away all those expenses from the charge you have collected from your client. And I explained earlier that if you had collected 5 million and you need to do filing fees, you need to do some application, you need to do a lot of things. What only constitutes chargeable amount is the amount that comes to you as your own fee. And even in your own fee, if you also incurred other expenses in the course of doing your job, even for yourself, because it's part of your business, the law is allowed to you to take it away. So whatever constitutes your profits, and profit is expenses, income minus expenses, income minus expenditure.
Yes.
And even the salaries you pay and all those things are allowed before you are chargeable to tax.
Sure. The next question has to do with the tax identification number. You know, you spoke about some registration for some unique identification number. That is it going to replace the present tax IDs? We have the tax identification number people presently have, businesses presently have.
Okay, you want me to explain? Okay, tax identification number. Now we have tax ID, not tax identification number again. And why? Is because tax identification number today has different meaning from one state to the other. So if you go to Lagos State, you have tax identification number. You go to Kebbi State, you have tax identification number. Or you go to Kaduna State, you also have tax identification number. Now, if all states were speaking to themselves and they mean the same thing, we are supposed to have just one single tax identification number in Nigeria. Sorry, I forgot. If you come to FIRS, we also have tax identification number. So what the government is trying to do is to ensure we have just one document, one number called the tax ID. And this number will be a single source of truth. And this number will not just be limited to a number issued by a state tax authority or the FIRS. It will be a number that all the tax authorities in Nigeria recognize. And so what it means is that we'll be synchronizing all the numbers in Nigeria today, whether at the FIRS or at the State Internal Revenue Services, together. And by and large, there will be only one source of truth. And for individuals, your NIN will become the biggest source of truth. So the NIN of individuals will now be synchronized with the TIN they have today. So for as many as they have NIN and they have TIN today, they do not need to get a new tax ID. The FIS and the Joint Tax Board is developing a portal where this synchronization is done seamlessly. And so going forward, you'll see that your NIN, your TIN, your BVN, your phone number, your passport number will end up being synchronized at the back end. And at the end of the day, any one of them you submit anywhere can pull out your tax ID. So your biggest source of a tax ID now we are going for is NIN. So if you have a NIN and a TIN today, you don't need a new tax ID. Thank you.
Thank you very much. We're out of time. Would like to thank you so much, Mr. Olarinde, for taking us through the new tax law and what we should expect. Come 2026, and how to get ready for it. Sharing all that checklist, and a lot of people have been asking for the presentation. Would please like to have a copy of that so that we can share it around to the participants. Thank you so much. I'd like to now invite Kayode to give us the votes of thanks. That's the chair of the Law Office Management Committee. Thank you.
Thank you very much, Sadia, for even moderating. I mean, you've done very well in your task. Thank you. But I want to specifically, appreciate Mr. Olarinde for this beautifully delivered presentation. As actually a faculty, as a matter of fact, we wanted it to be not just a panel-like session, but a quasi-academic session in the form of a masterclass that we can all learn from, especially in the area of operation as law firms. And you have done so well in your presentation. I know we've had lots of questions, and I can see some questions on. And as you rightly said, I think the first start is for us to all read the Tax Act and then digest it. And I also want to assure our members that we'll be having more of these practical, insightful sessions, that will not just be a talk show, but really sessions that will deliver on our day-to-day operations. So thank you very much. You came in, very unassuming and, very open-minded, and I'm really pleased that you accepted to be the one to deliver on this. So thank you, and we'll be calling on you again, and we hope that this partnership that we want to evolve with FIRS would blossom, and we'll all be better for it. So thank you, and thank you to all our members who have stayed on with us for upwards of 2 or close to 2 hours now. Please feel free to contact us at the SLP, MBSLP. We need more hands to join us to help us, to move the bar forward. So we'll be sharing the slides. We'll get the slides off Mr. Olarinde, and then of course we'll be sharing it through the usual platforms for our members who have signed on. So thank you, everybody, and over to you, Sadia, to close up. Thank you.
Thank you for having me. So sorry, I saw some questions in the chat board that looked very interesting. Somebody asking if Osusu monthly contribution will be chargeable to tax. Please, they are not chargeable to tax except they become income to you. They are savings. And so such savings are not chargeable except you earn an interest on that money. So the law only look for income, not contribution. So these are like capital, we understand that. So until there's an interest. And one thing we also need to understand is we operate what we call a voluntary tax compliance in Nigeria, and you need to do self-assessment. Assess yourself and come forward with how much you believe that you have been chargeable for in a year. And that's how you are supposed to be taxed. When the taxman is charging you, it's because you have not complied. So the taxman will not come to you until you have shown that you have not complied. And at that point, it will be difficult to talk about equity because you have not come with clean hands. And so that's when the taxman starts asking you questions that sometimes are difficult for you to answer. Please, I admonish everyone, and as those of lawyers that uphold are supposed to uphold the laws, we should be seen to be of an example to emulate. Thank you very much for having me. I'm always here whenever you need me. Thank you.
Thank you very much once again, Mr. Olarinde, for that comprehensive and very practical presentation. I'm telling you, a lot of us heard what we want to hear, in trying to prepare ourselves, in 2026. Some of us that are doing, what we should do is only to strengthen the internal processes, as you suggested, and those that are not doing it, now know, the roadmap to take in terms of, trying to comply with the law. And most importantly, as the chair, Mr. Kayode mentioned, we need to go and study the law first and foremost. I love the fact that you started with that, because a lot of us are guilty, on that. So this has really been an incredible, enlightening session. And on behalf of the Law Firm Management Committee of the Section on Legal Practice, I want to express our sincere appreciation, Mr. Olarinde, for taking your time to break down, this new law in a way that is really clear, actionable, and directly relevant to our day-to-day activities as legal practitioners. We thank all the participants that have joined, from partners, associates, solo practitioners, law firms, administrators. We thank you for disengaging and, asking all those, thought-provoking questions and making it, an interesting session. We would have loved to take more questions, but we're really out of time. And we'll share the presentation, and we're sure that you can reach out to Mr. Olarinde anytime. What is clear from this session is that, there are major changes taking place and we need to prepare. So as we return to our practices, we encourage us to start what we should do early enough and take Mr. Olarinde's suggestions and suggestions. And a special thank you to Mrs. Folashade Ali, the chair of the MBA section on legal practice, always very supportive of, all the committees under her, and our chair, Mr. Kayode Fabumi. Thank you very much for your leadership. Thank you, everyone, once again for joining us. Until our next session, please, let's be prepared. Let's strive to stay compliant and attain professional excellence. Thank you very much. Bye-bye.
Thank you.